Hey, good morning, everybody. Tuesday morning, 9:30 a.m. on the West Coast. The Fed chair and Steve Mnuchin are talking to the Senate right now. Not saying anything crazy out of the wild or anything. Clearly, they missed the mark with some of those facilities in the CARE Act. The loan demand size and where the money's at is not matched up great. So there's just some excess that they're trying to work out. Eventually there's going to be another stimulus that is going to reappropriate some of that money and probably add some new money and add some payments to people. So that's all that's happening at the federal level. They've been talking for the last hour. You can see in the Dow that 11 to 12 hour was the hour where they were talking, and now that they've kind of shut their yappers, we're turning around a little bit. So pretty obvious that interest rates are going to be lower and negative in real terms. Rates minus inflation is going to be negative for a while. So that's just where we're at with the macro part. And stock wise, we're right to where we started. We're within $100 of where we started at. We've gotten $42,000 allocated into a bunch of down days in a row, and we're flat. So I'm feeling pretty good about that and waiting for the market to take another leg higher. So let's hop in our positions and just kind of check our daily. Tesla's it's the worst stock in the NASDAQ 100. Battery day is after 1:30 West Coast time. And got our bounce back in Amazon. And we're just going to evaluate what we're looking at here. Let's hop and look at Tesla really quick before we do any trades or adjustments. So you can look at the yearly that we've bounced really strongly off the 50-day. That was probably 10 sessions ago, a couple weeks. Last night, Elon came out and said that despite battery day today, that most of what we're going to see in a few hours isn't going to be in production until 2022, and that between Tesla and all of the fuel cell battery manufacturers on the planet, they can't produce enough fuel cell and the relevant parts and materials around it. They can't source everything to meet all the demand for the next couple of years. I look at that as a good thing. Maybe I'm crazy. The stock has come down, it was $4.50 yesterday, end of close. So it's come down a good $22. And they always teach you supply and demand. But I think it's demand and supply. Where there's demand, whoever can supply it first will profit. And the supplier issue will work out. To me, I'm looking at the demand for Tesla deliveries is so crazy high that they can't keep up with demand. There's no other auto manufacturer that has that be their case. There's literally shortages of cars where manufacturers have shut down production, but that's not a demand issue. They're trying to keep the prices stable by reducing the supply. Tesla is saying we have so much demand we can't even produce these cars fast enough, and we can't even get our hands on all the stuff that we need to make them fast enough. That's a good problem to have. I like that problem. So keep an eye on Tesla. Having it sell off some today into battery day is interesting, but it also sets up an ability for them to outperform. So we're hanging in there. We're beating the NASDAQ, which is always our goal. Hey, look at that. We're above our starting number for the money school. So our starting number was $41,709. So we're now up $80. Let's go. All right, let's get into it. Enough yapping. All right, into our watch list. Housing, rocking it today. Retail, I didn't know that until right now. Okay, that's great. Retail is something that's a recovery trade for this country. Everybody knows that retail has been just a bear of a trade. It's a pretty dang nice recovery for this. I mean, this, if you look at the portfolio, it's Amazon. Interesting. Maybe they've reevaluated. This used to hold Amazon. I'm clearly out of touch with this. I didn't know Overstock was also crushing it like that either. So maybe we're sleeping on retail a little bit. The only retailer in here that I've been interested in the last couple of years is Carvana and Etsy. And Etsy makes sense to me, so does Carvana. I've recently been in the car buying process, and it's a nightmare. So it makes sense to me that Carvana is doing something a little different and having some success. Discretionaries are doing good. These spiders are really nice if you want a cheap way to play some of these names that you know. Discretionary will be a category that will need more stimulus to keep it rolling. Laggards of the day, man, silver just got taken out to the woodshed the last couple of sessions. Energy continues to be on its butt, gold on its butt. The financials is long, there's a long story there because there's money laundering that's coming out. There is, FinCEN had their big thing yesterday, and that took all of them down. And then there's the Fed talking, when rates are low, spreads are going to be compressed for the banks. They're not going to make much money lending for the foreseeable future. So they're just going to have to be creative and take more risk. So I think that's why financials, when this whole thing started, I posted that you cannot own financials or really any of the recovery trade until XLF gets above 26. And we rallied to 26 on the penny and failed. And now we're really breaking down, and I'm concerned that there could be quite a bit to go in these financials because they're tied to energy, and they're tied to recovery trades and loans and non-performing loans, and now credit spreads with negative interest rates or negative real rates. There's a lot of pressure on these banks, and they're the worst sector. A lot of the worst stocks of the day in different indexes are all financials. So I like payments and I like financial fintech companies, but these big banks are just dinosaurs that I'm not interested in. And if you look at all of the banks down today and then Square's up 1% and a third, I mean, that's really telling to me. I'd rather own Square, PayPal, Visa, MasterCard than owning Goldman Sachs or any of the financial money center banks. I think that's kind of a nightmare. So what we're going to do here is consolidate this portfolio down a bit, and we're going to reevaluate these housing stocks when we get back to it. But for now, I'm going to close and open up some buying power. We'll take 67 a share for these, and let's just build up some buying power. And then we'll also let Taylor Morrison. It's a tough one to let go, but if it's about performance in the short term, heading into the winter, the recovery has been choppy the last couple of days. I feel like it's almost more defensive to be in the high-tech growth. And so we're just going to rotate some of this money. And these are our core positions here. So we're down to 9 positions. I want Tesla to be at the top of where we're at. We can add to this a couple different times if we need to. I think Nvidia's kind of just getting chopped around as the world kind of rotates their money a little bit, but they're having the same issue as Tesla where they can't keep their supply on the shelves. They recently released the 3060, 3070, and 3080 GPUs. They released the 3080s and they were gone immediately. I mean, we're talking, $1,500 to $2,000 graphics cards for your computer. So, and they can't keep them on the shelves. They can't keep the A1000 or the A100. They can't keep the data center Ampere work centers on the shelf. I mean, they literally can't produce their goods fast enough for the world's demand. So that's where we like to be. My lowest conviction trade on here is probably Apple. And it's nothing to do with Apple other than the fact that apparently Warren Buffett has had such a huge win in this. It became half of Berkshire Hathaway's portfolio, and they are trimming it. Just like as you know, the recovery up to the top was fueled by a lot of buying on their end. A big part of this sell-off was, you know, a liquidation. That's the rumor. I think $110 a share, I think is pretty decent. I think it's fine. I don't really want to sell it, but you know, I'm not married to it. My top 4 positions, I'm quite a bit more interested in. Got $1,200 in cash. Let's add 2 more of Tesla, and then we'll go into battery day with what we've got. 15 shares, $6,400. Not going to make us or break us, but Nvidia, Tesla at the top, followed by Amazon. This is shaping up in pretty nicely. So, and we're getting a little bump up in DocuSign. I mean, look at that. We bought that thing all the way down. So we didn't get the bottom, but we got in the 190s. Our average basis is still above $200. So it is what it is. We stayed with it, and it's starting to work. This chart in Netflix is looking kind of dicey. But yeah, let's call that good for now. There's nothing that's really jumping out at me. We're mostly fully invested. We got a tiny bit of cash. We're leading all the markets with what we got, and we're going into Tesla battery day after the bell. With it as essentially our top position. So overall, pretty happy with how things are sitting. Hope everybody's trading is going well, and I'll check in with you guys soon. Thanks again, as always, for supporting the Money School.